Hey,
Yo,
where's your sexy face?
well, I only got 15 minutes, so I didn't know if I wanted to show my face in this quickie. But if
This
you
is
really
on.
want to see it,
This is live streaming.
live.
Live. I'm gonna send the link. Don't join this link, but this is the. Here's the streaming link for participants. For guest view. It's all live.
Live, baby, live. What are we
So you
talking
got
about? We're talking
50.
about how I'm getting thrashed in the markets right now. Is that what we're talking about?
When did you buy?
So it's crazy, right?
Oh
So
my gosh.
obviously when the news broke, right, the stock like went
Yeah.
nuts. It like dropped some crazy percentage, and it was I was looking at it when it was like around 167.
Yep.
And I was like, okay, that's interesting. And then I was like, is this a bank run? Is it not a bank run? And then it got down. Then it kept going down. Then it went down to like 100 and like 50 something.
It went down total 50, 60%.
Yeah, it went down
Right.
a shit ton. And
Right.
then so obviously with the baby and all, I had to like go to bed and I was exhausted. So I put in a limit order because I was like, let's see what happens, right? I was like, if this is like a true bank run, then this thing obviously is going to just keep going. So I put in a limit order at 100. Then
Right.
I actually was not expecting to get hit on it, put it that way. So I put in a sizable dollar amount because I was like, I didn't think I was going to get hit. And I was like, if I did get hit, then, maybe it's low enough that it makes sense where I think it's cheap and someone will come and save them. So the thesis now has to play out, or else it's
It's
going to
someone.
it's going
Someone
to hamper.
asked, right? So
Yeah.
what started this? And I was thinking, and he was like, "Is this so? So this is the banker, right? So he can't join the call right now. But usually when this stuff happens, right? So
Mm.
when Luna crashed, I go to him and I was like, "When's the last time the currency devalued?" And that's why we were talking about IMF and Soros and everything, because on Twitter, no one remembers
Mm.
Soros. No, and so we were kind of talking about that and what precipitates, currency devaluation. And so yeah, before we talk about the historicals, the last time you were saying bank run was Wachovia. I didn't remember that. I remember Northern Trust because I was there in the UK. Wachovia was there, but that was like hidden by institutions were failing, right? So I think the retail side was only one, but institutional banking was all crumbling, right? So I think that was the larger story. Was
I
it
mean,
not?
I can't recall, but like which of the I mean, let's put it this way. I mean, I have to imagine AIG's up there, right? Not
Yeah, exactly. Yeah,
bank
but again,
run,
but
but
but not retail bank run,
not retail bank run. I mean, Wachovia definitely was a deposit taking bank.
right?
There were others, right?
But they were much smaller because it started from like the MBS stuff, right? That's how it started.
Yeah, but there were. I mean, there's a lot. I mean, once, for example, like when Bank of America took over Countrywide, I think then there was a concern that Bank of
Oh,
America
right,
might go under
right.
because they got saddled with so many liabilities. So, yeah, I think the bank run, obviously it doesn't start with retail. Retail ends it. You know what I mean? It starts with something else in the system that people get nervous about.
Mm,
And that's when retail starts going nuts and they just start pulling their money left and right.
right.
Um, but yeah, quite a horrendous situation. I mean, obviously, I mean, to be fair, SVB did this to themselves. I, uh,
Okay.
I mean, I don't know like the full picture, but at the end of the day, like, right, they were shifting around, or they were
Yes.
doing balance sheet management, right?
Yes.
And they were effectively offloading some securities that then they thought, I think, they were going to sort of reinvest into shorter dated treasuries,
Correct.
right? They were yielding
Correct.
like 5%.
It should have
So in
been
the midst of all,
non-news. It should have been non-news.
well, the problem is, I think they decided to do an equity raise on top of that,
Yes.
right? And as
Yes.
part of that, I think they fucked themselves. Is like, I mean, at the end of the day, if you were going to raise a
Oh,
billion, I think it's like less than $2 billion, right? So it's
yeah.
like, why bother if
With
you're
an
well
equity.
capitalized, right?
Yeah. True.
I think that's basically what happened. It's like people are sort of like, so you're raising additional money. of about $1 billion when your capital base is supposed to be like ginormous. So you should be able to absorb, like $1 billion something in losses, right?
Right.
And then to raise equity, they were sort of like, that doesn't really make sense. Is something wrong? And then
Yes. True. True. Because Silvergate was a very different issue, right? They were not well capitalized. I think there was a mismatch of what was on the SEN, right, which is their kind of cryptocurrency settlement layer, and with their deposit. So that's different issue. And then so actually not linked to this. This was, I think you're right, a raise of the recapitalization of the long-term treasury bills that could have been kind of swept under if they didn't raise the equity.
I think so, because we're talking about like $1 billion or two. I think they're taking like a $1.8 billion like real loss, right?
Yeah. Yes. Yeah. 1.8, 1.5, something like that. Yeah. 1.8.
So then people start digging into the numbers and they go, oh wait, but they still have this much left, and if you mark to market it, and if they're forced to sell, that's like 15 billion. That basically eats all the equity, right? That's basically the concern right now. Everyone is like, oh shit, man, if they have to keep selling because they have to plug a hole,
Right.
then they're really fucked. And then the reason why they think they got to plug a hole is because they're doing this equity raise.
Right.
And it's like, everyone's like, smells blood. I have no idea. I mean, I don't know. There could be truth to this, right? Maybe they are liquidity constrained, and that's why they did this equity raise. Because if they didn't need the money,
yes,
I just feel like Goldman Sachs, who's leading the equity raise, is clearly fucking idiots, because I have no idea why they would advise their client in the middle of like one of the worst, uncertain economic market environments to go out and raise equity under this story, right? It just doesn't smell nice. And so that's why I think people go like, something must really be wrong, because it just doesn't make sense to do this. But let's see. I mean, General Atlantic's coming in for like 500 million. They're not dumb. I mean, they do lose money too, though, but they're generally not dumb guys. So I would assume that they would not have put money in if they thought there was a real liquidity concern. And they think that this is pretty, I don't know, opportunistic, but it's hard to say, right? I think a lot of people probably took some, like, I don't know, they probably took the Stripe playbook, right? They were like, oh, Stripe's out there raising money for, like, I'll call it operating type, expenses.
Right.
Like, I got to pay a tax bill, and so might as well raise money for that versus like just choking it down.
Right. Actually, correction. Actually, this is not a retail bank run. Actually, sorry. This is because it's not. Yeah, I think SVB doesn't actually have. I mean, they take deposits, but they're not consumer bank.
Yeah, I don't think. I'm sure they do some. I don't know, actually, to be fair. But yeah, I think this is more. I mean, but it's customer deposits at the end of the day.
Yeah.
And it's still the same issue, right? It's like FDIC only insures 250,000.
Yeah.
So if I got more in there, I should definitely be moving my money out. And then
Yeah. So I see a lot of advice there. Like, once a run starts, right?
Yeah.
And we were talking about this on the currency devaluation. Once it starts, it's almost impossible to stop until someone bails it out, right? So most of the currency during IMF did fail. Hong Kong did not fail, but because they had like plenty of reserves, and I think Soros did try, but it was like Hong Kong had like tens of billions, and now it's like hundreds of billions. But the history of bank runs, I don't. Yeah, right. It's not a good ending once it starts.
I mean, it's a confidence game, right? So once it happens, as you said, right, the only way to stop it is some sort of a bailout, whether it's government intervention or it's private capital, right?
Right.
And I think for SVB, I mean, they need one or the other, because I think the CEO basically came out and told everyone to like stay calm, which is like the worst thing, right?
But there's nothing else he can say.
I mean, there's nothing else you can.
Yeah.
I guess. I mean, I feel like you could say a little bit more than just like, hey guys, stay calm. Everything's going to be all right. Don't freak out, and we're all going to be good, right? And that's literally what like every single other institution that has failed in like the last 18 months has said. whatever like the
That's
crypto
fair.
guys have said, right?
No,
Like
no, that's fair.
ads or I forget what the other ones were, but like it's like the same thing. It's like once you say that, people know shit's bad, right?
No,
So
it's true.
I feel like you gotta give a little bit more of a plan, right? And this is where I'm like, obviously SVB is a sophisticated financial institution, but if your advisor is Goldman Sachs, you would have
Mm,
expected them to have, thought about this a bit more.
that's
And
fair.
maybe they did talk about it, but at least have like a press release ready or something, right? And it's just like nothing, and you're
Yeah,
like,
that's true.
my God, guys.
I didn't know it was actually Goldman as the advisors. Actually, that
Yeah,
should have been a big confidence boost. You're paying
yeah,
top dollar for Goldman,
exactly. You don't pay
right?
Goldman for service because, fuck, they're basically like any other investment bank,
Right.
but do pay for that brand, right?
Yeah.
So, yeah, I think the whole thing was execution was muddled, absolutely muddled.
So okay,
So
who
now,
could bail them out? So it's yeah, the federal government's not going to come in. They're not big enough. Then it's private capital, right? Then it's VCs, it's A16. It's someone was saying Warren. I don't think Warren doesn't want to do anything. He doesn't understand it. That's the thing. He doesn't understand.
I mean, I don't know. I mean, it could be Warren Buffett in the sense that like Warren Buffett has, bailed out Goldman before, doing a huge preferred thing. So I'm not going to count anyone out, put it that way. I think it's always possible. The government could bail them out, but do they really want to go down the whole 2000
Yeah,
bail bank out thing again?
exactly.
And
Right.
it's
Yeah.
a whole moral hazard argument, blah 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 blah. But look, obviously, when with SVB news, right? Every other bank now is under the microscope. So the entire
Yes.
like banking sector basically took a hit yesterday because everyone was like, you know, what's happening to SVB is not necessarily isolated from the perspective of everyone's got a shit ton of treasuries on the books.
Yep.
And everyone is now taking this mark to market hit because the Fed has basically come out and said higher for longer,
Right.
25, now 50, right, for March. So it's like, everyone's now subject to the same risk. So, if there's contagion, although I don't expect there to necessarily be contagion,
I
but
don't think so either.
if there is contagion, then you can see the government, stepping in.
Oh
Outside
yes,
of that, yeah,
that's true. Like they only step in on a structural, systematic issue, right?
yeah,
I think that's the only reason why they joined in because it was just MBS was so pervasive across the industry. Like they
yeah,
had to, right?
yeah. And, people got designated, right? Like
Yeah,
SIFIs, whatever they're called,
right.
systematically important financial institutions, right? So everyone has to maintain their ratios, and
Right.
the Fed goes in every fucking quarter and goes to the books,
Right.
hits them here and there. Tier ones get hit, can't do dividends, can't do buybacks, blah blah blah, right? So I would say government intervention seems unlikely, meaning that yeah, you would expect the VC guys. I mean, look, if I'm a VC guy, like a big one, right? I'm sitting there going like, well, two things. One, obviously, a lot of my portfolio companies have money there.
Right.
So if they can't move money fast enough, this is going to create some sort of cataclysmic type of cycle within
Right.
called VC space.
Yep.
But then I think on the outside of self-help, I would say from like a corporate development perspective, why wouldn't like a venture capital firm want
Yeah.
to get into venture
That's right.
lending
That's
and,
right.
build out the AUM,
Yeah,
charge
that's
their,
true. That's true. That's true. Venture
2%,
debt. Yep.
everything
That's
else,
right.
right? So I could see this being an interesting sort of corporate development game for a lot of the VC guys. I mean, private equity has already shown that this happens, right? There becomes a diversification of capital to grow the AUM. So I assume that VC may look at it that way as well.
And you're right.
Um,
A16 actually is well poised, right? Because other VC firms, it may be not inside their mandate to do this. A16, I think, is a fully. I think they've got like the full financial services license, whatever that license is. They can offer a whole range.
I mean, I don't know, but let's put it this way. I think any VC guy trying to buy out, so let's just say they're trying to buy it out. They have to go through the same hoops as if Coinbase wanted to buy a bank. You know what I mean? It's like this the whole regulatory.
Yeah, that's true. It is a licensed bank. Yeah.
Um,
Yeah.
so
And so that excludes crypto because I'm kind of thinking CZ or Justin might, say, "Hey, look, this is our chance, right, to buy a US bank." But the
I,
regulators will not let that happen.
yeah, I mean, I don't know, right? I mean, you never know. I mean, Kraken's got a banking license, and they might start their own bank, right? And you just saw the SEC lost against Binance US and Voyager. So,
Wait, the SEC lost?
I think the SEC, the bankruptcy judge basically said, we're going to let this transaction happen, SEC. So,
Right. Oh, I know they paused it because they didn't have information on Binance. Where it was like commingled, right? And they're like, okay, there's no way this thing is okay, but I don't know.
yeah, I don't know. As in, like, I'm not too sure, like,
Let me see.
exactly what the dynamics between the Justice Department, right, and the SEC are in terms of, like,
Right.
how they need to play together. But yeah, the bankruptcy judge says it can go ahead, then it can go ahead, I guess. Obviously, if someone steps in for national security reasons, that becomes like a different story.
Right, right.
If you're a bankruptcy judge, I guess your mandate is to ensure, orderly process, all the parties, get their fair share or their sort of, I guess, whatever, their day in the light to sort of say whatever they want to say, get whatever claims they want to get in, and then get their money back. So I don't know. But anyway, yeah. So anyone could step in. I think then it just becomes a regulatory thing. But the other complication is obviously SVB is public.
Right.
So there is a, if someone's lobbying in a bid, it takes time, right, to sort of ultimately close public to private, especially for bank. Then, whether or not that bid is going to staunch continued, customer flow outflows is another story as well. So there's a bit of risk there.
Hmm.
So I could see that also being slightly problematic to buy the entire enterprise, but to come in with like a big check, I think is a bit easier than saying I'm gonna, because at least you have some liquidity, right? You can get in and get out. But to say you're gonna buy the whole thing, sign a merger agreement, and then sit and wait, and that whole game I think takes too long.
So another public institution could, right? A
Uh,
Coinbase.
could
Right.
Coinbase could go in? I mean, it could just be another bank, right? Like Bank of
Right.
America could just
Yeah.
come, Citigroup, whatever. These guys come and say, look, we want a venture arm.
Right.
And we'll buy the
Right.
book.
And that would be the fastest, actually.
I would assume that in this circumstance, I could see, yeah, maybe the government just says, yeah, Bank of America, you're big enough. This is not really going to add too much to your huge monopoly.
Right.
And so the antitrust and all that probably not going to be that big of a deal.
Right.
But, everyone's got shareholders though, right? So Bank of America will probably have to go through some sort of shareholder approval on their
Sure.
end, board
Yeah.
approvals, blah, blah. So everything takes time, I would say.
But that would be the likeliest. That sounds like at least the simplest way to execute this. Because I mean, who private during the MBS type of stuff, right? Like who it was federal government did, and then there were other banks buying other banks. I forgot who bought who. Yeah, Bank of America bought a few. Lehman was
Lehman went under.
Nomura.
Barclays Nomura.
Barclays
Bear
Nomura.
Stearns went to JP. Wachovia went to Bank of America, as did Countrywide. And then Bank of America also bought Merrill Lynch.
Oh yeah.
Yeah, so I mean,
So it was mostly public buying public.
well, I mean, at that time, right? It was like Hank Paulson was in the driver's seat at not the Fed. Was it the Fed? No.
It was yeah.
I forget where he sat again. And then there was like Tim Geithner, right? Ben Bernanke. So Ben Bernanke was at
Treasury.
the Fed.
Treasury.
Yeah,
Treasury.
Yeah, Treasury. I think Geithner might have been New York, but so anyway, yeah, these three guys basically orchestrated the whole thing, right?
Mm.
Because they knew the financial sector was obviously going to go under in some way, shape, or form without government support. So they basically played God, right, with all the financial institutions. So in that sense, it wasn't like the banks bought other banks or financial institutions because that's just what would happen in a cycle. I think it was partially driven by the fact that they had support by the government to go ahead and consolidation play. Otherwise, like all of them were facing similar challenges in terms of the risks on their books.
But I was saying in terms of execution, it was, yes, even though it was started or strategized by Treasury, by God, like execution wise, I think it was wise. I'm asking the question: is it easier for a public company entity to buy another public one? Because
Mm,
otherwise, like Warren's only stepped in. Warren didn't buy Lehman. I know there was they pitched him, and he was like, "No, I refuse a call." And then Goldman, what did he actually buy? He bought shares of Goldman, right?
got preferred shares.
He got preferred shares. So he negotiated directly with him, or was it
Must have been direct, yeah.
right?
So public is tricky, right?
Oh, that's true. Then I
Private
guess.
into public is easier.
Oh, was it really?
I think so. Because then it's just like you take the money, you just gotta, get board approval, and then you gotta announce it, and it's sort of like done. I'm sure there's some shareholder stuff involved, but
Yeah, that's true. You only have one side that
shareholder,
right,
correct.
right.
So
But then you have to be big enough and well capitalized enough on the private side, and know who like the counterparty, right? Like you're negotiating directly with the CEO or the CFO.
yeah, I would say so. I mean, at this point, yeah, like Greg Becker over at SVB and his team are probably just like talking, to every VC out there, right? I
Right.
wouldn't be surprised, right, if Mark Andreessen and Greg
Sure.
Becker are like having a call,
Sure. Right.
to like
Him,
get some.
Bernie off.
Yeah, exactly.
Yeah.
So
Right. Elon. The same
all these
crew.
guys.
Right.
So I mean, they write quick checks, right? You saw what like whatever.
If they can buy out
Elon is
Twitter.
buying Twitter. Yeah, right. Yeah,
Right.
everyone
Yeah.
just like lobbed in checks. It was
That's,
like no
yeah.
diligence required.
Right.
We
Right.
throw
Right.
the money.
No, that's
So
true.
so that's why I think like the VC guys,
Or
although
yeah.
yeah,
Or
I'm still
not even VCs, because VC then it's a mandate issue. Like which will this go under, right? Versus if you go to like founder Bernie off, and then you go to like Musk, at least then it's just them, right?
well, I mean that's the thing, right? I mean, if you follow the press on the Twitter thing with like Mark Andreessen, like the text messages, right? It was just like we're in, no
Yeah,
diligence
that's right.
required.
Yeah. Do you
So
need more?
yeah. So I think like
It's like kissing the ring.
yeah, but to your point, right? It's like the rich guys obviously can move faster because it's just their own
Right.
money.
Right. Yeah.
Um, and with the FTX debacle, I could see how it's harder, right, for the VCs to move the way they moved before, just because there's so much
Right.
scrutiny around diligence now.
Right.
So you never know, right? That recent FTX thing could be the reason why SVB can't get money quickly, if that makes sense.
I
Because
could
too much
imagine.
now might take over.
Yeah. But at least at the end of it, you could say, well, SVB has an asset, right? Has assets, and then FTX, you just weren't sure. Or you just kind of, you had the conclusion that they didn't, right? Um,
Yeah, I don't know,
and I'm
but
just thinking because on the venture side, like how do you put this under like which fund? So you probably want to kind of put this in an SPV, but then you have to talk to your LPs and say like who's in. So it's could be complicated, right? Slightly more complicated.
yeah, I mean, I'm sure there's always a way to figure out the mandate piece, right? Because usually these purpose clauses are a bit broad. And if they really needed to like get LPs to move, I mean, typically they can move pretty quickly. But all these venture funds now have like a debt facility as well, right? So they can basically just do a called a pre-drawdown on their debt facility and then just have it backfilled with LPs. So they could move very fast if they needed to, I guess is the point. Which I think SVB needs now. So, and the craziest part probably is that SVB, and this is where the whole shit with like, oh, I can't believe Sequoia funded FTX while FTX is or Sam Bankman-Fried, right, is a LP in Sequoia. It's going to be the same dance because SVB is probably a huge lender. All these venture funds as well, right? So it's like, doing the whole round tripping of capital. So that would also be like a weird thing as well. So, yes, I think the capital call piece will also be an interesting dynamic for VCs into SVB.
How much what's the magic number that needs to be stumped up? What's the card?
Oh, dude, at this point you don't know, right? Because it's gonna. I mean, let's put it this way: worst case scenario,
Yeah.
15 billion plus.
The market cap is 6.2 billion.
Yeah, market cap's down.
Yeah. But their high was, well, I don't know. A year ago was much bigger. It
They're
was,
$20 billion market cap, I think.
yeah, it was about 20. It was actually even up to 40,
Yeah,
up
it's just huge.
to October 2021, 42.1.
So, but yeah, in terms of their whole, I mean, based on just the general numbers, not taking into account maybe even today's market, but I think just as of yesterday, it was like 15 billion whole if they had to sell everything. And then on top of that, you layer on the customer sort of bank run situation. So ignore the cap. I would ignore the mark to market stuff, right? Because that's just like if they sell. So, and they would only have to sell if they had to cover, right?
Sure.
Customer
Right.
drawing funds.
Right.
So what you really need to do is you just need to try and stop the customers. And the only way to really do that, I think, is the confidence game, right? Which is you just probably need a big number, at least
And
a
just in
couple
your
$1 billion.
facility. And just say it's a facility.
Yeah, preferred shares or whatever it is.
Right. Right.
Shareholders are obviously going to get absolutely rocked if that happens from a dilution perspective. But I think longer term, yeah, this probably sets them up well, hopefully, to ride this back out.
Interesting.
Yep, that is SVB in a nutshell. So I think they got about good 24, 48 hours to get this money from whomever, big marquee names, announce something to the market, get everyone comfortable again.
Right.
And share price hopefully steadies, maybe even pops, and then customers stop taking their money out, and then we sort of get back to, I'll call it, orderly market conditions.
And you would Goldman would be working on this, right? Or would they just say screw it?
I'm sure Goldman is definitely
Pitching.
involved,
Right?
because I'm sure they're getting a lot of calls from big institutions that are like,
Oh yeah, that's true.
a huge block or whatever.
Right.
So yeah, I'm sure they're involved, and then yeah.
What did you were Credit Suisse, UBS, Merrill,
Yeah.
BAML,
BAML,
BAML, and where?
Macquarie.
Oh yeah, Macquarie. I always forget that.
And
Were
then
you
I was-
M&A? You weren't M&A.
No.
Oh, okay.
I'm a credit guy.
Yeah, that's what I thought. Okay, all right.
Restructuring, special sits, leverage finance.
Oh, okay. Oh, fair
I've
enough.
done it all.
Right. My summer of M&A. So I was basically just going through like, oh, how would you do the M&A deck? Right? Where are the synergies? How much would you pay?
Oh, there's no time for that kind of analysis. It's like
Yeah, this is more such a
yeah.
Yeah.
Is people in the know got to put some money to work. Otherwise, it just takes too long and the company's dead by the time you get to the end of it.
Yeah.
So
Interesting. So yeah, probably easiest is an American larger bank or private individual. That would be the fastest. Maybe VC funds, and then in just the pecking order, and then maybe banks. But for banks, this would be just a tiny little drop, right? They'll be like yeah, it'll be strategic. You'll have to the story has to be really nice,
yeah,
and it could be nice.
It could be. I mean, they
Right.
want to get into venture lending, right?
Exactly, yeah.
Whatever ecosystem. I mean, all of them want to. A lot of banks are trying to do the whole LP financing, right? So I suspect it's just another layer on top of it.
I mean, so it's actually not outside the realm. This would be a good acquisition. Like there should be a lot of candidates.
Oh, at this price, definitely. I mean, at $6 billion. Mean,
from 42 a year ago.
Yeah, and they're absolutely, they're not like in a position to really negotiate that hard, right?
Right.
So yeah, this is like the ideal time. If
Right.
if they were ever on a list for M&A, this is like the perfect time, right? Because they are absolutely stuck between a rock and a hard place.
Actually, I'm sure Goldman, JP, they had pitched this before, right? So they just call those guys up and say, "Hey, remember what I pitched you a year ago? Well, here we go, discount price."
Yeah, I mean, Goldman would be best positioned. I mean, in the sense that now they're talking to every investor in the world,
right?
As part of the equity raise. So now
Right.
I'm like everyone's calling them,
Right.
or calling the company directly.
Right. Fair enough.
So yeah, I'm sure people are gearing up, but this definitely puts SVB, put it that way, on many lists. In the, assuming they survive,
Right.
they're already going to be on a list because the market cap is so low now.
Right.
That
Right.
bite size.
So okay. So this would be a good outcome. Like it's the probability is to a good outcome.
Assuming they
can't-
survive. Yeah.
Yeah, because I can't see why this would not be like this is not a systemic issue. This is a one-off kind of run, and I mean structurally they're kind of sound. They're strategic. So the likelihood is good.
I fucking hope so, Mr. Down Low, because right now I am
You're
down
underwater.
low.
Oh, yeah, that's what it is. I was like, you're a credit guy. I was like, are you a trader? Were you a trader? I didn't think you were a trader. What were you doing?
No.
What are you thinking?
Not a trick. Not a trick.
Oh no. I tried shorting once. I'm not a short trader. I can't do short. I tried it and I was like,
Yeah.
I'm terrible at it.
I don't believe in shorting, but I do believe in some sort of event driven. So this is definitely event driven that, yes. Luckily I didn't, put in something like 140.
Right.
But 100 still not looking good given I think aftermarket it's like in the 80s. So it's horrendous.
I'm terrible at it. I can only go long. That's the only way I can go.
Fair enough.
Yeah, I can only go long. Go long. But it's entertaining nonetheless. Okay, cool. What are you doing?
Cool, man.
All right, it was good. All right,
Good chat.
good chatting. I'll see you around. We'll talk later.
Yeah.
All right, bye.